Today, we are diving into a trading strategy that's, believe it or not, incredibly simple but also really powerful. And the best part, you can get the hang of it in just the next few minutes. It all comes down to one basic tool, a simple line on a chart.
Okay, so let's just start with this. This is a real quote from the trader who uses this strategy. $200,000 just from drawing lines. I know, that's a huge claim, and it immediately makes you ask,
Right? How on earth can something so basic actually lead to results like that? Well, it's not some kind of dark magic. It's actually a very simple, very repeatable three-step process.
Think of this as your game plan. It's the blueprint you're going to use for every single trade. And the cool thing is, it's the same logic whether the market is screaming upwards or trending down.
It really is this simple. First, you just figure out which way the market is going. Second, you patiently wait for that pattern to break. And third, you jump in on the new direction. That's it. Identify, wait, enter. So before we can actually do that, let's make sure you've got the right setup.
All right, so every artist needs a canvas and some brushes, right? Same thing here. Before you can draw any lines, you need a place to do it, and you might be surprised at just how easy it is to get started.
So your main tool, your go-to platform, is a website called TradingView. And the best part is, it's totally free to use. It's where you'll look at charts and, draw your trend lines.
And what's really cool about this strategy is that it works on, well, pretty much anything. You can use it on stocks everybody knows, like Apple or Google, or you can apply it to futures markets like platinum or other metals. If it has a chart, you can try this.
Okay, next up, you have to pick a time frame. And don't let that term scare you. The source has a great way of putting it. It's just the way you look at the pie. Each one of those little bars on the chart, people call them candles, just represents a slice of time. It could be 5 minutes, or it could be 4 hours.
And that choice really defines what kind of trader you are. Are you a day trader, someone who's using, say, a 5-minute chart and wants to be in and out of a trade in a few hours? Or are you more of a swing trader, looking at a 4-hour chart and maybe holding on for a week or two? It's the same strategy, just a different speed.
Okay, enough theory. We've got our tools, we understand the concepts, let's get our hands dirty. We're going to walk through a real trade example on a platinum futures chart using that 4-hour time frame.
So step 1, remember, just look at the chart, see what it's doing. In this case, it's pretty obvious the price is moving up. Our only job here is to draw a line that shows that upward trend visually.
Now for the nuts and bolts. In TradingView, you'll grab what's called the Ray tool. You start at the absolute lowest point you can see, and then you just angle that line up so that it connects with as many of the little dips as possible. Each one of those touch points is basically the market confirming your line. So yeah, the more touches, the better.
And now for what our source says is, believe it or not, the hardest part of this whole thing. Doing absolutely nothing. You just sit on your hands and wait. You don't make a move until the price clearly breaks and closes below that line you just drew. Seriously, patience is the name of the game here.
And then it happens. The price smashes through your line. That's it. That's your big signal. It's telling you that the old upward trend is probably running out of gas, and a new downward trend, a reversal, might be starting. This is the moment to get ready. But hold on a sec. This is where a lot of people get stuck. I mean, it makes sense, right? If the price of something is falling, how in the world can you make money from that? Well, the answer is a neat little trick called selling short.
Let's break it down. Your broker basically lends you some shares. You immediately sell those borrowed shares at the current high price. Then you wait for the price to drop. Once it's lower, you buy the exact same number of shares back, give them back to your broker, and you get to keep the difference. You literally profited from the price going down.
And here's the most elegant part of this whole thing. To get out of your trade, you just rinse and repeat. You do the exact same process, but in reverse. You draw the new downward trend line, you wait for the price to break above it this time, and boom, that's your signal to close out the trade and hopefully take your profit.
So that's the how. We've got the mechanics down. But what about the how much? What are the real results like? And maybe even more important, what are the pitfalls? Let's look at the numbers and then the reality check.
$200,000. That's the number we started with. It's the profit the source claims to have made just in 2024 with this exact method. So where did that come from?
Okay, so this is a little speed round, pulled right from the trader's actual broker statements for 2024. As you can see, January through May, all profitable months.
And after taking a month off in June, this streak continued right on through the rest of the year. The results are, they're pretty incredible. But, and this is probably the most important thing I'm going to say,
This is a direct quote, and you have to hear it. It doesn't work out like this every single time. Sometimes the price breaks your line, you get in, and then, whoops, it fakes you out and snaps right back. This is not a magic crystal ball. No strategy works 100% of the time.
So, all this leaves us with one final big question. Can a simple line you draw on a chart really be the key to it all? For some traders, this simple framework is how they find clarity in what looks like total chaos. For others, it might seem way too simple to ever work. But it does make you wonder. Maybe the real secret isn't some complex algorithm, but just the discipline to follow one simple rule over and over again.